You've been lied to about interest rates like your whole career. You've been trained to think about the cheapest loan is the best loan, that low rate equals smart business. I think that's today still what they teach in business school, and that's what your CPA is probably telling you. But I want to show you the math, and I want to show you the hard data that proves that your quote unquote cheap bank might actually be the most expensive money that you'll ever take. Well, I call it the liquidity paradox because look, if you watch the news, they're going to tell you the economy is softening. But if you talk to actual business owners like we do, and you probably do every single day, the ambition is still huge. I mean, the demand is obviously there. You guys want to grow and you see the opportunities. But here's the problem. The infrastructure, right, that's supposed to fuel that growth, the traditional banking system, if you will, has completely retreated. It's like they're in this permanent defensive crouch. I mean, I want you to think about this. You walk into a bank today. Let's say you have perfect credit, 750 FICO score. You got $5 million in annual revenue. Well, they're still going to treat you like you're a risk. They're going to hand you a stack of paperwork, 2-3 inches thick, and they're going to make you wait 60 to 90 days just to get a maybe. And honestly, that isn't just annoying. That is a betrayal of the social contract. So look, we just finished this. It's our new report on the economic advantage of Speed First Capital. And listen, we didn't write this for marketing. We wrote this because we wanted to prove mathematically that waiting for a cheap bank loan is costing you entrepreneurs a fortune. So let's get into the numbers. Okay, guys, before we even talk about the money, let's talk about the time. So in the report, we track the customer journey, and it's brutal. So if you go the traditional route, you're spending on average, right, 25 to 30 hours just gathering documentation. And you know what I'm talking about. It's the tax returns, the profit and loss statements, the personal financial statements, the updated interim financials, and it seemingly never ends. Now, you're the CEO. So I want to ask you a question. What is your hourly rate? 500 an hour? Is it, 1,000 an hour? Well, if you spend 30 hours fighting with a bank portal, well, congratulations, you just spent $30,000 of your own time before you even got $1 of funding. And that in and of itself is a hidden tax that nobody talks about. Now at Cardiff, you can connect your bank account. You click a few buttons and it takes minutes. So you stay focused on running your business, not auditing a bunch of tax returns. But the real killer, the thing that is destroying and slowly eroding your margin, is the cost of delay. So let's slow down for a second and let's actually do the math together. So check out section 1 of the report. Okay, so we modeled this composite organization, right? Basically, it's like a typical, commercial construction company. And let's say they needed $250,000, right? $250,000 to lock in materials for a government bid that they want to make. So option A, the bank. All right, great. They go to the bank, they get a great rate. Let's say it's 9%, but they wait 50 to 60 days for the committee to approve it. And then by the time the money hits their account, the bid's closed and the contract went to a competitor who moved faster. So what's the ROI on that loan? Well, it's negative because of all the time that they wasted applying. All right, so what's option B? It's the Speed First model. Now let's say you use Cardiff. So you apply in the morning and then you're funded in just a few hours. Yes, the rate is higher than the bank, but let's be real about that. This is a premium product because you end up having the cash that afternoon. You won the bid. And then the profit for that job, $400,000. So I want you to think about that. You pay a little bit extra in interest, maybe $20,000 more over the life of the loan, but you made $400,000 in profit. Well, the math says that the cheap bank loan actually cost you $400,000 in an opportunity cost. And really, this is my point. There's a cost of delay, and in 2025, it's eating Main Street alive. And I don't see that changing in 2026. Now, here's where it gets even more interesting. And this is the part that banks truly don't want you to know about. Historically, if you wanted speed, you had to go to like a predatory lender, right? It was this binary choice, right? You could have cheap and slow, which are banks, or you could have fast and expensive, like the shark. But I want to sort of get you to take a look at section 3. 78% of the businesses choosing Cardiff right now, well, they're not desperate. They're what we call the new prime. So who are they, right? These are businesses with 700 plus FICO scores. They have millions in revenue, and they could get a bank loan if they wanted to wait, but they're choosing not to. So why? Because technology has broken that trade-off. Listen, at Cardiff, we use tools like Plaid to audit your cash flow in real time. We don't need like a stack of tax returns from 2 years ago to know that you're healthy. That means that we can give you institutional grade pricing with fintech speed. So in other words, you don't have to sacrifice margin to get the momentum anymore. And that is a huge paradigm shift. I want to give you one more specific strategy that I think the smartest CFOs are employing right now. Now it's in the report under benefit B. We call it the supply chain hedge. We all know that 2026 is right around the corner, right? We've got tariffs still on the table. We know inflation is still sticky. So smart businesses, they're using our capital to play what we call offensive defense. They are borrowing money now to buy like 6 months of inventory in advance. Now I want you to think about the math. So if steel or lumber go up 15% next year, and then you borrow from Cardiff at, let's say, a 10% interest rate today, but you lock in at current prices, well, you just made a 5% arbitrage profit on your inventory. You're literally trading a depreciating asset, cash, for an appreciating asset, which are your materials. But you can't do that, can you? If you have to wait 60 days for some bank committee that doesn't even know who you are to approve your loan. And then by then, the price hike has already hit and you missed the window. You missed your opportunity. I would argue you need a partner who can move as fast as the market. Entrepreneurs, I want to end on this. I believe deeply in the American dream. I really and truly do. I think it is the greatest engine for prosperity that the world has ever seen. But that dream doesn't run on hope. It runs on capital. And when a qualified business owner is forced to wait months for a loan, they're not just delaying a transaction. They're deferring a dream. Right? We're telling job creators of this country that, their ambition is less important than a bank's bureaucracy and red tape. Well, we built Cardiff to fix that. So do me a favor, do yourself a favor, go to cardiff.co, download this report, read the customer journey section, right? Look at the math under cost of delay, and don't let a slow bank dictate your future. The tools are here, the speed is here. I'm William Stern, Merry Christmas, let's get to work.